Hello traders, welcome back to the Forex Kick, where we explore trading tools that can sharpen your decision making in the market. Today we will uncover the Vortex Indicator, a unique tool designed to help you identify trends and potential reversals with clarity. So stick around as we break down this indicator, how it works, and guide you step by step on how to incorporate it into your trading strategy. By the end of this video, you would have an actionable insight to elevate your trading approach. We start by understanding how to trade using the Vortex Indicator. Now, trading using the Vortex Indicator involves a systematic approach that combines trend identification, entries and exit points, and risk management. This strategy focuses on utilizing the Vortex Indicator alongside moving average to enhance your trading decision. So begin by adding the Vortex Indicator to your chart using a standard 14 period setting. As you can see, we used a length of 14 period for your Vortex Indicator. Pair this with 3 moving averages. You will use 3 moving average, you will use the 50 moving average, the 10 moving average, and the 200 moving average. We'll make use of 10 moving average, the 50 moving average, and our 200 moving average. These are the tools we use to capture different market periods. Now let's change the color to not mix things up. The 200 moving average will be our black line, 50 moving average will be the yellow line, and our 10 period moving average will be our blue line. Your primary signal occurs when the positive vortex line, which is this blue line, crosses above the negative vortex line. When the blue line crosses above the negative vortex line, this indicates a bullish trend. However, to increase the probability of a successful trade, you have to wait for confirmation from the moving average. Now, when we see a crossover from your positive vortex, when it crosses above your negative vortex, this signals a bullish trade. And before we confirm the bullish trade, we have to see a crossover between our 10 moving average crossing above the 50 moving average, and all this should happen when price is above the moving average. This will signal our buy trade. You'll be looking for price to be above the short-term moving average, with the short-term moving average crossing above the medium-term moving average, which is the 10 moving average crossing above the 50 moving average. This alignment suggests a strong upward momentum. Now for a bearish trade, first of all, the reverse is the process. You wait for the V negative line to cross above the positive line. At this area, we can see this red line, which is the negative vortex line, crosses above the blue line, which is the positive vortex line. This signals our bearish segments are coming into the market. Now, when we have seen the crossover, we wait for price to be below the short-term moving average, and the short-term moving average must cross below the medium-term moving average. As we can see, this blue line crossed below the yellow line, signaling a bearish crossover, and this is a signal for us to enter our trade, and we would enter our short trade when price trades below all the moving average at this area where we saw the crossover. This would be a good place to enter our short position. and we place our stop loss just above our 200 moving average at this area, and we place our stop loss, our take profit, at a risk to reward of 1:1 risk to reward ratio. As the trade progresses, you have to monitor the relationship between the vortex line and the moving average. You can also consider taking partial profits when price reaches the long-term moving average, as this often acts as a significant resistance or support level. For our buy trade, we would enter the moment we see our positive vortex line crossing above the negative vortex line, and when we confirm this with price being above all our moving averages, and we saw a crossover between our fast moving average, which is our 10-period moving average, crossing above our 50-period moving average, this will be a signal for us to enter a buy position. Stop loss just below the previous swing low, and you aim for a 1:2, 1:3, or you can use a trailing stop while you would exit your trade the moment you see a bearish signal. You exit when you see the vortex line crossing back in the opposite direction of your trade. However, do not exit immediately at the crossover. Instead, you wait for confirmation from the short-term moving average when it crosses or flattens over the medium time moving average. This can signal the beginning of a new reversal, so you would have to exit your trade at that area. Now remember, no strategy is foolproof. Always manage your risks by limiting your position size to a small percentage of your trading capital. This means that when you are entering a trade, you should not enter with a risk to you would not enter with more than 1 to 2% of your trading capital on a single trade. So if you are to enter this trade, what you should be willing to risk should be a maximum of 1 or 2% of your trading capital on a single trade. This approach helps you to ensure that no single trade can significantly impact your overall trading account. Risk management is so important. So by combining the Vortex indicator with the moving average and implementing a strict risk management rule, you can develop a robust trading strategy that aims to capture trends while minimizing potential losses. Now let's look for one more example, and as you can see, when the crossover happened in our Vortex indicator, where the positive vortex line crosses above the negative vortex line, at that area we look at what the moving average is doing, and we can see the short-term moving average crossed over the medium-term moving average, and this happened when price was above all the moving averages. This is a good signal for us to enter a long position. We place our stop loss just below the recent swing low, and we aim for a 1:2 or 1:1 risk to reward ratio. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe, and turn on the notification bell so that you never miss out on more trading tips and strategies. Thanks for watching, and I will see you in the next video.